check on business news, and Asian financial markets have been thrown into turmoil with oil prices falling to their lowest in 4 years. Investors also opting for safety due to continuing fears that the COVID-19 outbreak will send the global economy into recession. Now, Hong Kong's Hang Seng Index shed more than 4%, the Shanghai Composite dropping by 3%. Japan's benchmark Nikkei, it fell by 5%, marking the biggest one-day fall since mid-2016. The broader topics slid over 5.5%. Weak economic data added to the gloom, and it shows that Japan's economy shrank by a worse-than-expected 7.1% in the fourth quarter of last year. The Kospi shed more than 4%. Singapore's STI gave up 6%, and it's the biggest one-day loss in more than a decade, taking the index to its lowest in more than 4 years. And there were similar falls in Bangkok and Taipei as well, all in the red. Now, U.S. crude oil futures were down about 22% to about $32 a barrel, recovering from an earlier drop to around $27, or a third of its value. And that's the biggest decline since the first Gulf War, and that was in 1991. It comes after the world's top exporter, Saudi Arabia, slashed prices. Well, Saudi has also threatened to release additional oil supplies on already strained markets. The move would be designed to punish Russia for it refused to cut production. OPEC and its allies met last week to discuss how to respond to falling demand caused by the coronavirus, but they failed to agree on measures to slash output. Now, the collapse of the talks has now triggered fears of an all-out price war. U.S. markets expected to be hit by a wave of sell-offs when they open in an hour. Nick Harper is in Washington, D.C., and he joins us now. So, Nick, U.S. futures suggesting that Wall Street is also in for a beating.
That's right, Glenda. It's looking like it's going to be a terrible day for Wall Street. It's just over an hour until the markets open, but I think investors are preparing for a very big sell-off. Looking at the futures market at the moment, the Dow Jones potentially going to open 1,300 points lower. The Dow, the S&P and the Nasdaq all pointing at a 5% drop the moment that the markets open in just over an hour's time. Now, overnight, the S&P futures market trading was halted briefly, and there is a chance that if it drops more than 7% during the course of the day, then there is a circuit breaker that would place the market on lockdown for 15 minutes. It has been a very turbulent last couple of weeks. Last week, weekly, the Dow Jones just about managed to get a gain, but the week before that, it was down 3,500 points all in all. During today's trading, we're expecting to see the energy sector and the banking sector punished in particular, and we're also likely to see investors looking for safe havens. Things like the bond market and gold prices are likely to increase as a result. That sell-off that we've already seen in Asia and that's happening in Europe at the moment is likely to continue throughout the day. Now, the Federal Reserve has already cut interest rates. It slashed them by 0.5% last week, and there is betting amongst investors that we're likely to see a 0.75% drop when they meet next week, which would be an enormous cut for the Federal Reserve to make. Of course, Donald Trump, he has signed that funding bill into place, an emergency funding bill totaling $8.3 billion. But it is, of course, a worrying time for the president. During a re-election bid year, he needs the economy to be doing well. He is a president who has very much placed his trust in the markets, has talked about it time and again, how he has helped it. He needs Wall Street to be up. He needs jobs to be growing. He needs GDP to increase. And the real long-term worry for him, if we continue to see a fall in the markets as we are at the moment, that all of those things will have a hit, and it will make it very difficult for him during the coming months. So investors looking ahead to today, not looking ahead with much optimism, is likely to be a very bad day for Wall Street.
All right, thanks for that. Nick Harper speaking to us from Washington, D.C. Now, Howie Lee, an economist at OCBC Bank, he joins me now. Howie, well, you know, we hear there it's been a bloodbath, actually, in financial markets and around the world. Apart from, let's see, the yen and gold to some extent, you know, pretty much all asset classes, it tumbled. And as Nick said there, you know, futures opening low. How much more do you foresee markets dropping?
Well, at this stage, really, your guess is as good as mine. You know, I will look away from the screen and I will come back a minute later, and the numbers on the screen would have been completely unrecognizable. I think a lot of this black box that we are in is due to the fact that no one is entirely sure the true economic impact of the COVID-19 on our markets. But we do note that whatever the financial markets are going through right now is largely related to sentiment, is fear, is what we economists call animal spirits. What was unthinkable a week ago, 10-year yields at zero, oil at $30 a barrel, gold even at $2,000 per ounce. What was unthinkable last week suddenly looks very possible right now.
Okay, the U.S. in particular, it has been in a 12-year bull market. Last week's declines dragged the Dow almost 13% lower from its record high, and many are now expecting it to go into a bear market. What are your views? Do you think it will go into a bear market, and for how long?
I think what we have to note is that going into 2020, the valuations on Wall Street, especially the S&P 500 and the Dow, were on the higher end of their curve. So if I'm not wrong, both of these indices were at the 97th percentile in terms of their price-to-earning ratios. Even after the entire bloodbath that they have gone through in the last 1 to 2 weeks, they are still slightly north of their 50th percentile. And we know that in a sell-off, prices tend to go below their 50th percentile. So it does suggest to me that there is still some downside for Wall Street at this point in time.
All right, well, let's not forget that oil as well, it played a part. And the last time oil prices were below $30 a barrel, this was in 2016. Basically, this year so far, it has fallen almost 50%. Is the decline overdone?
Well, it was interesting. So over the weekend, when we heard the news, we did some work. We said, all right, oil is probably going to go to $30 a barrel. We came in this morning, before we could hit the send button on our report, the market opened, and as you know, Brent fell to as low as $31 a barrel. But it's no coincidence that we caught for $30 oil. And that is because the average cost of production in OPEC is roughly about $30, especially in the Middle East. That's the lowest average cost in the world compared to the likes of, say, Russia, the US, and China. And we know that in economics, when players compete for market share, prices tend to fall to the lowest cost of production. And that in our case would be $30 a barrel. So if you ask me, no, I don't think it's overdone. I think there's some economic intuition as to why we are seeing prices at this point in time.
All right, thanks so much for your insights. Howie Lee, an economist with OCBC Bank.